All right, so what's the difference between a Roth IRA and a traditional IRA? First of all, I hear a lot of people refer to IRAs or Roth IRAs as investments, and actually they're just vehicles that have tax advantages. So once you establish that Roth IRA or that traditional IRA, you can invest it really in a variety of different ways. IRAs, or individual retirement accounts, are designed for long-term investing, and it was designed for retirement. Now, some IRAs are available through your employer, but the two most common are designed for investors to use on their own. Now, while these accounts, they've got a lot of similarities, there are some key differences, and primarily those differences lie within tax deductions, accessibility of funds, and eligibility for contributions. All right, so with traditional IRA contributions, the money that you contribute, guess what? You can deduct that contribution from your taxes in that tax year that you make that contribution. But what you're doing is you're kind of delaying the inevitable. So when it comes time you retire and you start to withdraw money out, that's when you pay taxes on those distributions. But with Roth IRAs, when you make that contribution, you don't get a tax deduction. So you're paying taxes on the contribution that you're making, but on the back end, years later when you retire and you want to withdraw money from that Roth IRA, it's generally tax-free. So you've paid it all up front, and it's generally tax-free when you withdraw that money. Let's talk about income limits. Now, with a traditional IRA, there is no income limit. So anyone can contribute to a traditional IRA as long as they have earned income. Now, that deduction depends on whether you or your spouse, if you're married, do you have an employer-sponsored plan, or such as a 401k or some other type of retirement plan. Whereas Roth IRAs, they do have some income eligibility restrictions. For example, in 2020, if you're a single taxpayer and you make less than $124,000, you're eligible. But once you start to reach $139,000, that begins to phase out. And if you're married, filing jointly, and your modified adjusted gross income is $196,000 or less, you're okay, but it starts to phase out between $196,000 and $206,000. All right, now you're retired and you're going to start taking distribution. There are some distribution rules. With a traditional IRA, once you reach the age of 72, you are required to take a certain amount out, and that's called the required minimum distribution. But with Roth IRAs, there's no age limit where you have to take money out. Well, let's talk about, wonder if you needed money before you retired. So there's a magic age called 59 and a half. If you withdraw money from your traditional IRA before age 59 and a half, guess what? You're going to pay a 10% penalty on the amount that you withdrew, and you're going to have to pay taxes as well. In contrast, you can withdraw sums, equivalent to your Roth IRA contributions, penalty and tax-free at any time, even before age 59 and a half, as long as you've had it for 5 years from the date of your first contribution. All right, so how much can you contribute to a Roth IRA or a traditional IRA each year? So these contribution limits are the same for both, and they change each year. But for 2020, the maximum contribution limit is $6,000. But if you're over 50 years old, you can add an additional $1,000, making that total contribution $7,000. So to sum it up, the big difference between a traditional IRA and a Roth IRA is the tax advantage. With the traditional IRA, you get a tax deduction generally up front, but when you retire and you want to withdraw money out, all of it's going to be taxable at your normal ordinary income tax rate. With a Roth IRA, you don't get a deduction on the contribution that you make, but when you retire, all of it is generally tax-free. So think of it a little bit like this: pay a little now with the Roth IRA, or pay a lot later with the traditional IRA. Which is best for you? It depends on your particular needs and your circumstances. So questions on this, I invite you to give me a call. I'll be happy to discuss it with you.